morning, sir. Good afternoon, sir. Good evening, sir.
We said in depreciation simply means what? Tear and wear in value as a result of usage. Is that not so? Now, we now told you that there are how many methods to calculate depreciation? We have 4 methods, namely straight line method, 1. Diminishing or reducing balance method, that's 2. What do you call it? Renovation? Revaluation. Number 3, it is called revaluation method. Number 4, sum of the year digit method. Those are the 4 major methods on how to calculate depreciation. Now we are going to look at the first one, which is what? The straight line method. Here is an illustration on how to calculate it. Now, the cost of a machine is 10,000 naira. The residual value is 4,000 naira. It is expected to last for 4 years. Use the straight line method to pick. It means that we are going to be calculating the residual value and we are going to be calculating the depreciation schedule. Those are the 2 things we are going to be calculating. The residual value simply means what? We are going to follow the formula given. What is the formula given? Cost minus residual value over this is the useful life. So to calculate it, we got 1.5. So which means that 1.5 is the rate at which the machine reduced each year. The first year it reduced by 1.5. The second year it reduced by how many? 1.5. Reduced by how many? 1.5. Reduced by how many? 1.5 for 4 years. Now we want to look at how to calculate accumulated depreciation, which means that over the years the depreciation can be more than. Yes, we continue from where we stopped. In our previous class, we talked about depreciation and the methods to use when calculating depreciation. I gave you 4 different methods. Now, we did straight line method in our previous class. Today, we'll be dealing with diminishing or reducing balance method. Every of these methods, they all have their formula. Now, I gave you the formula for straight line method. Now, the formula for diminishing or reducing balance method is this.
1 minus
n square root of residual value over cost, where n is meant to be the estimated useful life. Now, we have a question here. Whatever method you have to use, they will always indicate in the question. Like in this one, they have already made mention of the residual. So when they've made mention of a residual, you are going to use the residual formula. They say we should calculate the depreciation rate. That's the first thing. That's the same thing we did while we were doing straight line method. Do you remember? So the next thing, we are going to substitute 1 minus our residual, the year, useful life, is what? 5. Remember I said where n is supposed to be the estimated useful life. So anywhere you see n, you are going to put the years there. So the year that we have here is 5 years. So you are putting 5 here. Over 200 divided by 6,400. That's the cost. Did you get it? Are you with me? Now, after calculating everything, divide, we got this. And then 1 minus 0.5 is the same thing as what? 0.5. 0.5 plus 0.5 is 1. Is that not so? So it's also regarded as 50%. All right? Now, let's go on. Here is a calculation about before we calculate our schedule, before we go and prepare our schedule. You know, there's a schedule that we prepared for straight line method, like a table like this. But in residual value, you can also jump this stage and come here if you can work this on your own. But in residual value, it is advisable you work this before you go to the schedule. So now here's how to calculate the depreciation for the 5 years. The first year, the cost of that motor vehicle is still what? 6,400. That is in 1999. And then our new depreciation rate is how much? It's 50% or 0.5. That's our new depreciation rate. They said that we should calculate the depreciation rate, which we have used the formula to calculate, and we got 50%. Are you with me? Now, you are going to do this. You are going to calculate for each year. The first year of 1999, cost of the motor vehicle is what? 6,400. The depreciation for that first year, the same way we did the schedule of the straight line method. That's what we are doing here before we now prepare the normal residual depreciation schedule. Do you get what I'm saying? Now, the depreciation here is 50% of 6,400. 50% of 6,400 is what? It's the same thing as what? Dividing 6,400 by 2. Remember, we said 1 minus 0.5 is equal to 0.5 or 50%, which means that even if we use 0.5 to multiply 6,400, we are still going to get 3,200. Are you with me? So that's for the first year. Our depreciated value, the residual value for the motor for 1991, the first year is 3,200. The second year, we are going to do the same thing again. This is our new value after the first depreciation, 3,200. 3,200 multiplied by 50%, we got this. The same thing as dividing it by 2 or multiplying it by 0.5. Are we together? So we did the first year, second year, third year, fourth year, and fifth year. At the end of the fifth year, it is called a scrap value. Yes, of 200 naira. And here is our depreciation schedule. In the depreciation schedule, we have 4 columns: the years, the book value at the beginning, depreciation, accumulated depreciation, and net book value. So in the second column, where we have the net book value, we are having 6,400. From here, we bring it down. Second year, 3,200, we bring it down. Third year, 1,600, we bring it down. Fourth year, 800, we bring it down. Fourth, fifth, up to 400. The same thing applies on the third column, where we have depreciation. So we are going to be taking only depreciated cost, our answer from our depreciation here, and replacing it right here. In the table, we have 32, 16, 800, 400, and 200, just as we see here. Now, how do we get our accumulated depreciation? Accumulated depreciation simply means as the motor vehicle piles up at the end of the year. So the first year was 3,200, which was our depreciated value for the first year. The second year, you add 1,600 plus 3,200, you get 4,800. So 4,800 plus 800, we got 5,600. 400 plus 5,000, we got 600. 200 plus 6,000, we got 6,200. And then that's how we got our accumulated depreciation. And the net book value is just right here. Picking it here and then filling it on the table. Now I'm going to prepare a ledger with what we have here. First of all, the first ledger we're going to prepare is our motor car account. And on the debit side of the motor car account, we are going to record a cash entry, which means the motor car is receiving cash to give us the vehicle of how much? 6,400. And after that, we are going to prepare our depreciation account, which will include both depreciated values and profit and loss. So we do that correspondingly. Thank you.
Can you save me, Father?